Bookkeeping is the meticulous recording of all financial transactions that a company makes. Bookkeepers are the professionals who keep track of all this data for a company. And by using proper bookkeeping methods, companies can assess their performance, make decisions, and plan for a better future. Let's talk about why bookkeeping is so important. It gives a company a reliable measure of their performance. It provides information that can be used to make strategic decision-making and benchmarking against other companies. It's critical for cost management and keeping track of every penny that's spent by a company. And lastly, it's important for external users. That includes people like investors, financial institutions that lent money, as well as governments for paying taxes. All of these parties need to have reliable information about the company. Now let's look at the difference between accrual and cash basis accounting. First, let's start with a definition. On a cash basis of accounting, transactions are recorded only when cash is used or when cash is received. However, on an accrual basis, transactions are recording when they occur, even if the cash is not paid or received. For example, imagine that a company purchased 100 units of inventory but will not pay for them until next month. On the cash basis of accounting, there is no record because no cash was involved. On the accrual basis of accounting, the transaction is recorded as an accounts payable liability on the balance sheet. Since virtually all companies use the accrual basis of accounting, bookkeepers spend a lot of their time managing and accounting for all of these transactions. Thank you for joining us for this quick tutorial on bookkeeping.